Hey friends, have you ever felt confused what's right or wrong in the stock market? You read something online, watch a video, and suddenly everyone around you is talking about a new company, a hot trend, a must follow strategy. It can be overwhelming, right? But the truth is, the people who stay calm, patient, and follow few basic habits often end up doing much better in the long run. In this video, I will share 5 powerful rules that experienced people quietly follow. These are not shortcuts but protect you from making big mistakes. So let's dive into them. First one is don't get pulled by the crowd. Many people think that if everyone doing it, it must be right. They start following TV news, social media tips or what friends are saying. This is called as following the herd and in the stock market it can be dangerous. A lot of people jump into something just because it's a trending but they forget to ask one important question. Why am I doing this? Always pause and think of yourself. Try to understand the reason behind move. Blindly copying others can lead to regret later. In fact, many smart investors says the best time to stay cautious is when everyone else is getting excited and when others are scared, that's when you stay calm and observe carefully. The market rewards people who think independently, not those who just run with the crowd. Second one is let logic win over the emotions. The market goes up and down, that is normal. But what's not normal is how some people react. They get too greedy when the prices rise and too scared when the prices fall. One day they are confident and the next day they want to quit. That's where emotion becomes your biggest enemy. Instead, train yourself to stay calm. Think of it like driving a car. You do not slam the brakes or hit the escalator too hard just because of a speed bump. You drive smoothly. In the stock market, smooth drive means thinking clearly, based on fact, not based on feelings. Do not make decision because of fear or excitement. Take a step back, look at the full picture and think slowly. Third one is know what you are getting into. Let me ask you something. Would you ever buy something very expensive without knowing how it works? Of course not, right? Then why do people often enter the market without understanding the company, the business or even the risk? Only go ahead when you clearly understand what company does, how it makes money and whether the business feels trustworthy. Even one of the world's famous long-term investor, Mr. Warren Buffett says he avoids things he does not understand. If you know how to banks earn, how pen company grows, how FMCG company sells, then focus on those areas. Fourth one is stop trying to guess the market. This is the big mistake many beginners make. They try to predict when the market will go up or down. They wait for the perfect moment to enter or exit. But here's the truth. There is no perfect moment. Even expert cannot always predict the exact highs and lows. Instead of spending energy on guessing the market's direction, focus on learning how the market works. Do not treat it like a game of timing. Think of it like growing a plant. You not dig it up every day to check if it is growing. You water it, give it sunlight and wait. The same thing work in the stock market. Keep learning and give it time. Fifth one is balance is more important than being right. There's an old saying, do not put all your eggs in one basket. I have already covered fifth point in my last video. Stop doing these 5 things in the stock market. I'm attaching the clip now and I would recommend you watch that video as well. Many people look at how much they can get, but they forget to think about what could face if things do not go well. This is the big mistake people usually do. Being prepared and careful is very important, especially when the market keeps move up and down. One common mistake is put all the eggs in one basket. If that one area does not do well, it can affect the whole plan. That's why need to spread the eggs across different area. Another thing is if something dropping too much, waiting and hoping for it to bounce back. that can make the situation worse, taking the decision based on the business condition, like the case of Yes Bank. Let's quickly wrap up what we have learned today. Do not get influenced by the noise. Do not let emotions control your actions. Know the business before stepping in. Do not try to predict the market like a magician. And finally, keep things balanced and safe. These may sound like a simple ideas, but they can protect you from making big mistakes. Which rule did you find most useful? Please let me know in the comment below. If you found this video helpful, please hit the like button, share it with your friends and subscribe to Trading with Hariom. We'll back in next video. Till time, happy investing.